AI trades back in the green after that tough week last week. Comes on the back of a reported massive $18 billion financing deal for an Oracle-tied data center in New Mexico. Our Deirdre Bosa is looking at that and this new divide in AI for today's Tech Check. Hey, Dee.
Hey, Carl. So Oracle, that's just the latest AI mega debt deal. And it really underscores a growing contrast in the AI race at large. Now, in the U.S., the AI boom, it is being built on borrowed money. So massive data centers financed through private credit and bond markets. In China, as a contrast, it is being built on efficiency. That's cheaper chips and open source models, far leaner infrastructure requiring far less capital. Now, this is the Artificial Analysis Intelligence Index cited by Goldman in a note over the weekend. Chinese models like Kimi and Alibaba's Qwen, they're ranking alongside top American models on benchmarks despite that massive difference in investment. Now, the latest breakthrough, it came last week from a Chinese startup backed by Alibaba called Moonshot. Its open source model, Kimi K2, outperforming on several standard benchmarks and reportedly costing less than $5 million to train. Now, if that sounds familiar, it's because it is. It fits into the story that's really been emerging from China's AI scene since the beginning of this year. Moonshot, Minimax, Qwen, and yes, DeepSeek all continue to close the performance gap with far smaller budgets. Now, take a look at this chart. U.S. cloud giants, they are projected to spend nearly $700 billion on data centers by 2027. China's biggest players, Alibaba, Tencent, ByteDance, and Baidu, they are together expected to spend about $35 billion. That is a 20-to-1 gap in capital spending for systems that are performing at roughly the same level. Now, of course, the bet for each side is different. The U.S. is chasing AI dominance, levering up to reach AGI first. China, on the other hand, it's racing for scale or deployment. Now, Wall Street's still rewarding the American model. And this week, though, we are going to start to see earnings results from Chinese internet giants. So investors, guys, they will get another look at the other side of this equation, of this race, and how far efficiency and open models can go without the trillion-dollar capex. And with markets already a little bit jittery over some of the huge debt financing deals, this could raise those worries to the top again to see just how little the Chinese are developing with.
Yeah, watching those IG spreads pretty closely, Dee. Thanks. And, of course, we'll get Cisco later in the week and AMAT, too. That'll